You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
And it's mostly retail selling. The CEOs that I talk to, the management that I talk to, I'm always checking Canadian Insider to see who's buying, who's selling. You know, strong hands aren't selling here. It's retail that's selling. And I'm even starting to see insider buying. I'm seeing management buying some of the stocks that I own and some of the stocks that I'm following to take positions in. So days like today make me very happy because I'm seeing companies, I'm following companies that are seeing insider buying by management. Their market caps are coming down to a ridiculously low level and compared to where I believe the gold price is going to be within 6 months.
Welcome back to Mining Stock Education. I'm your host, Bill Powers, speaking today with my friend and newsletter writer, long-term junior mining investor, David Erfle over at juniorminerjunkiewithay.com. David on Twitter right now as we chat on Monday. One of the trends is Black Monday. Now, you've been alerting your subscribers that something like this could occur. So could you give us your analysis of what you're seeing going on in the general equities as well as the junior mining stocks, please?
Sure. Yeah, it's margin call Monday, basically. This was all set up by that CPI that came out. And I sent out an alert to my subscribers the day before that CPI alert came out, warning them that what may happen if it surprises to the upside. And boy, did it surprise to the upside. But the big surprise was on the following Friday, everything started taking a dump and going into the US dollar, but also gold. Gold came down and tested support at 1825, and then it turned around and shot higher after the Michigan consumer survey came out, showing the lowest indicates the lowest levels of consumer confidence ever in its history. So the gold price shot up with the US dollar while everything else was pretty much being sold. And it also turned around the mining stocks for a day. So we come into trading on Monday morning here, and the S&P and the Dow and the NASDAQ have shot down below their earlier lows from a few weeks ago. The bounce did not really last very long, and it didn't go as high as most expected. Shorts were pretty large in the market, so many were expecting some more short covering, maybe back up to the 4,300 level in the S&P. Wasn't even able to make it after that much hotter than expected CPI report came out. So everybody's in panic sell mode here, and gold is now being hammered as well. As you know, gold is one of the easiest things to sell for margin calls, and that's being sold as well. Mining stocks are being hit. So, as personally, since I prepared myself and my subscribers for this, the half portion of my portfolio that is cash is happy this is happening. The other half of my portfolio that has core positions in many juniors is not so happy, but I am happy because they're just core positions. I can add to them later with these lower prices. So that's the kind of position you want to be in when you're expecting something like this to take place. You want to be in the position to root for either outcome, because this has been set up for quite a long time, with the Federal Reserve being behind the curve and the market losing all confidence in the Federal Reserve and most of these central banks now, quite frankly, as they've lost control of inflation. I mean, first they come out and they tell us that inflation is transitory and it's not going to last. And then you have Treasury Secretary Yellen basically coming out and apologizing for getting that wrong. I mean, how often do you hear any government official apologize for being wrong on anything? So I kind of congratulated her for that. But as far as what they're doing and how they're doing it, they've been trapped, and all of us here in the gold sector know they've been trapped. I mean, we've waited for this outcome. We've been expecting this outcome, and now we're just waiting to see when the Fed is going to pivot back to being dovish and back to saying, "Hey, wait a minute. We cannot it doesn't look like we can raise these rates as aggressively as we wanted because the economy is crashing. So, of course, they're going to flower it up with some other language. But the Fed has historically pivoted the last few times. The last time it only took 6 months for them to pivot when they started raising interest rates in December of 2018. So, with all this debt that is the sovereign debt crisis that's going on, the global debt is over 300 trillion. The U.S. debt is over 30 trillion. The interest payments on that debt, once it does get to 2%, is over $1 trillion. The market's already priced in. The Fed raising the Fed funds rate to 2.75% by September, and that's basically 2 more 50 basis point rate hikes and a 75 basis point rate hike. So now with the CPI coming in so hot on Friday, investors are wondering, hey, are they going to raise 75 basis points this Wednesday? We don't know. It's created more uncertainty. And what do investors do when there's a lot of uncertainty? They sell and they go to cash.
So if we don't see this 50 basis point hike on Wednesday of this week, is that gold's trigger that some are expecting? If the Fed stops and turns dovish, as you're saying, could this be the blast off point?
That's not going to happen this Wednesday. They're forced into raising rates here. They got to get it. They have to get up to an area where they can come down from. It's only 1% right now. So I expect
mortgage applications are down 22% last month. I saw
exactly. Yeah, I know. And the mortgage rate is over 5.4% now. It went from less than 3% to over 5% in just a few months. That has taken a lot of people off the market, out of the housing market. So yeah, I mean, they are stuck between a rock and a hard place, and it's an election year. So how long are they going to let the markets tank before they pivot? I think gold started to sniff out a pivot last week, last Friday, and I think. What the market is going to be keying on is what Chair Powell is going to be saying in that press conference afterwards, because they're going to raise 50 basis points, and they're going to lower their balance sheet, and we know that that's going to happen, but they're going to be waiting to hear clues on whether they're going to maybe they're going to up it to 75 basis points at the July meeting. Or the September meeting, they're going to be focusing on the dot plot, basically. That's what investors are going to be keying on while the markets are falling into this decision on Wednesday. The actual decision will be made at 2 p.m. Eastern time, and then the press conference begins at 2:30 Eastern time on Wednesday. So it's going to be quite volatile going in there, and then once that press conference takes place, it's going to be extremely volatile in the marketplace while that's taking place. Because, it's funny. And as far as the mining sector is concerned, this is all taking place during PDAC. PDAC has been delayed to June this year, and it's taking place during arguably the most important FOMC meeting. So, the PDAC curse looms large again. Is it going to be a reverse the PDAC curse? If the Fed comes out and starts talking a little dovish to soothe the savage beasts of the market and try to get people from stop panicking and selling everything. I mean, that's the big question here. And the funny thing is as I'm talking about this, and we're trying to look forward to see how the Fed is going to handle this really difficult, the most difficult predicament the Federal Reserve has ever been in. It's quite frankly, this is the most difficult predicament the world's largest and most important central bank has been in. We have to realize how tiny the gold market is, especially the mining sector. To put it into perspective, Amazon the other day went down a large amount, right? Like over 7-8%, something like that. What Amazon lost in one day is more than the entire mining sector, the entire gold complex. the market cap of the entire gold block complex. That's incredible, and that's why the miners are basically spring loaded here. You see the volume is really dried up in a lot of these juniors. Like my account is really not down that much today in comparison to how far down the GDXJ is, because most of them are sold out. There's not many left to sell. It's mostly retail selling. The CEOs that I talk to, the management that I talk to, I'm always checking Canadian Insider to see who's buying, who's selling. Strong hands aren't selling here. It's retail that's selling. And I'm even starting to see insider buying. I'm seeing management buying some of the stocks that I own and some of the stocks that I'm following to take positions in. So days like today make me very happy because I'm following companies that are seeing insider buying by management. Their market caps are coming down to a ridiculously low level and compared to where I believe the gold price is going to be within 6 months. And I've got cash to deploy once I feel there's capitulation coming into the stock. And capitulation has been happening in a lot of these stocks lately. And it could come to a head on Wednesday.
So, Dave, you mentioned you built up cash in your portfolio, and that's essentially a hedge against uncertainty and if your mining stocks decline. What are some other ways that you hedge your portfolio? Can you share a few tips, please?
Sure. Yeah, I sent out an alert. Basically in my newsletter a couple of weeks ago, I said I was going to short the S&P with a 3-time short ETF vehicle, SPXU. Now, this is very high risk. It's a day trading vehicle basically. So, I didn't want to hedge by shorting miners because it's ridiculous to short miners here. They're so cheap here, and they could pop at any moment. Like what happened last Friday could happen at any time. These things, and it usually happens when everybody least expects it. So shorting the stock market made more sense to me. But I wanted to wait for a lower risk entry point because I thought that the S&P would at least get to like the 4,300 level. So I was waiting for that to take place. Unfortunately, it didn't. It started to roll over and sell off sharply right after that CPI came out. So I didn't get it in. But I got a lot of nice emails from my subscribers that did. They were able to short, and they're doing very well right now. So that's all I care about. As long as my subscribers are doing well, I'm not too upset about it because I still have all this cash, and it just gives me more cash to deploy once I feel that this slingshot this major bottom in the mining stocks occurs. I mean, I think it's in the process of taking place, but I just don't know how much more panic selling is going to come into certain stocks that I'm following or the sector. I mean, if you take a look at the GDX, for instance, it's making a series of higher lows. The GDXJ, a series of higher lows on a weekly closing basis. And the 30 level on the GDX is all important. I mean, that 30 level has been critical support and critical resistance going back 6 years, ever since the second phase of the gold bull market started in late 2015. That 30 level has been a magnet. So GDX right now is trying to hold above it right now, and it's closed below it a few times on a daily basis, but weekly it's pretty much held that 30 area. And also we've got the quarter end coming up here at the end of the quarter. So if the GDX closes below 30 on a quarterly basis, that would not be good. So closely looking at that. And as far as the GDXJ is concerned, if it gets, it's trying to hold that 35 level. That's been really strong support going back for a few years. And, it's basically been lagging because it's full of higher risk juniors. So I'm looking at maybe a 32 area being seen if we see more panic selling coming into the stock market and this S&P gets down to like 35 or maybe even 3,200, because 3,500 is a 50% retracement from the peak that it made in January 4th from the pandemic low. That would be a 50% retracement. And then a 61% retracement would be around that 3,200 level. So if that takes place short, sharp, panic-wise, then we could see that 32, 33 area in the GDXJ maybe, and that would be a 50% retracement of its high that it made in August of 2020, and after going up 300% in 4.8 months. So this sector can be crazy. It can show you crazy moves. You have to be super patient. You have to be super diligent, and you really have to manage your risk, and don't trade on margin in this sector by any means.
So you said it's retail, not an insider selling right now. But for you and I to get the gains we want, we need retail to be gobbling up these shares that we own. And you've said to me in the past, and you've told your newsletter writers, that we need to see $2,000 gold not become a ceiling, but become a floor, or we need to see a lot of M&A action. Okay, so I segue with that to say one company in your portfolio, Gold Standard Ventures, they signed a definitive agreement to be acquired by Erfle Mining for a 35% premium at today's share price, which some could argue is a take under. So is this a takeover, take under? What's your analysis here?
Well, if you're a legacy shareholder, you're not happy with this deal. But, I got into it basically a little about the same price as where it's trading right now after this merger was announced. I like the deal. I just watched the webcast and I looked at the slide presentation. I like the deal because I got in. It's pretty much trading at what I paid for it right now, and I think Erfle can advance the project. It slips in well with their other projects. They've got a couple of high margin oxide projects with huge sulfide components to them. One is in Mexico that they just built on time and under budget in this day and age, and that's a good confidence vote for the management team, especially if you could bring it in under budget while everything has been screaming higher in this, as inflation is crazy everywhere. And they're cash flowing. They just announced an 8 cent per share beat in their latest quarter, and cash flowing $39 million. And they've got another project in Panama that's similar. And Gold Standard Ventures, a railroad pinion project, slides right in with that model. So they're on basically, if this merger goes through, and I expect it to, both boards have approved it. And everybody's on board with it. So if it goes through, they're going to be they're slated to be a 500,000 ounce per year producer in a few years. Depending on when they get the permits for the other two projects. So I like the deal. I'm probably going to hold my shares. I may even add to them later. Once I feel a bottom is in the sector or in the stock. So yeah, that's basically why we buy these things. But we obviously hope for a takeover at a higher premium. Earlier in the year, I was fortunate to have a company that was taken over at a decent premium, and I did do well with it, along with my subscribers. And that was when Perseus Mining took over Orca Resources. So, I fully expect this to continue. This started when the M&A picked up again when we had a high-profile major merger announcement of Gold Fields taking over Yamana. And anytime this happens, it's been happening at the bottom of markets when everybody's selling their shares and panicking. As opposed to when it was happening during the last cycle in 2010, 2011, when it was the top of the market. And obviously management learned from their huge mistakes of taking over, large bulk tonnage mines with low margin projects at the top of a market. It killed the industry. It killed the sector. So they've learned from all those mistakes. They got strong balance sheets now, and they're making these takeovers at the right time. They're buying them on sale when they should be buying them on sale. And it's only going to be good for the sector because this sector needs a lot more consolidation.
Dave, you and I in 2019, we spent 3 days together in Nevada, and we were on the Battle Mountain trend, Eureka trend, And I remember having a discussion, but I don't fully remember the answer. And we were saying, why hadn't Gold Standard Ventures project been bought by the JV between Barrick and Newmont yet? And if I recall, the leader said, well, it's probably because they're just focused on what they have at hand. Even though they have all this infrastructure here, they have their exploration potential, so they're just focusing on this right now. Do you recall, or why do you think it took so long for this discovery and then now what is now a deposit to be bought out from a company that doesn't even have any existing infrastructure in Nevada?
Yeah, that's a great question. I think, well, one, I think the previous management team over-drilled the project and over-diluted the stock. And once this new management team took over, the damage was already done, and the sector came into a bear market. So I think that's a big reason. Another big reason is it's not as large as it could be after all the money they spent and all the drilling they did. So I think they saw a lot of waste there. But as far as this deal is concerned, it's a great deal for Orla shareholders. And like I said, it's not a very good deal for anybody who got into Gold Standard Ventures at any point basically before this year. Because the stock has been steadily going down, ever since it peaked. I think it peaked in 2016 or 2017. It was one of the darlings of the sector. It got a U.S. listing, and it was the go-to stock for a while. But it has been cratering ever since. And I got into it thinking, wow, look how cheap this thing is. And it's got this U.S. listing, and they've proved up a nice deposit. They've got this huge land package. This is ripe for a takeover at a decent premium. Well, I was right about the first part, but the decent premium part I was wrong about. But like I said, it's trading at pretty much where my subscribers and I paid for it. So I'm probably going to recommend that we keep it, because I'm going to keep it because I really like the Orla model. I like the management. I like what they've done so far, and I like the prospectivity of all three of these mines once they get into production. Their margins are going to be over $1,000 per ounce at these gold prices, and I fully expect the gold price to be a lot higher once they're up to producing 500,000 ounces per year in a couple of years.
And to also put it in perspective, the 52-week high on the stock was 74 cents. The deal was priced at 65.5 cents. And I think it was trading at like 55 cents Canadian. So, it's like if you're already in it
on a day that the sector is tanking, and not just the sector, but everything is tanking. And while everybody's going into the U.S. dollar, the timing of the deal is not good either. But it's great for Orla shareholders. So, if you're an Orla shareholder that got in before it took off, you're happy.
Yep. Last question. It's summertime here. We're in mid-June. PDAC is occurring for the first time in June, not March, as you referenced. Is it sell in May and go away? Should we expect any fireworks this summer, or what do you think?
Yeah, well, it's been sell in May and go away since August of 2020. But as far as what to expect, like I said, we're really getting down to the nitty gritty here on what gold is going to do. It's either going to really fall out of bed and take a huge dump, and we're going to see massive capitulation. But what I'm seeing, all the signs that I'm seeing in what's happening with a lot of these stocks, most of them have already had their capitulation. They're trading at these incredible values. And like I said, it's that magic $2,000 gold price. But, the gold stocks always anticipate this. They always move first. And as far as capitulation is concerned, you're seeing capitulation in the marketplace right now. The gold stocks have historically began to sell off before a major market decline, and they always bottom before the major market decline bottoms. A perfect example is 2008. I remember going to a conference in in late 2007, early 2008. It was like getting very, very frothy. I'd done really well. I was in a serious life change where I was quitting my job and making this my full-time, making investing in mining stock my full-time job. So I sold quite a bit. I didn't sell everything, but I sold quite a bit. And sure enough, the mining sector pretty much predicted the decline of the stock market, because we all know what happened into October of 2008 in the mining sector. I mean, we just saw massive capitulation. A good example of massive capitulation of a quality asset was in 2006, Barrick Gold made an offer on Nova Gold. And I think it was like $16 a share, all correctly. I fortunately was a Nova Gold shareholder, and I was very happy with that offer. I took it. Nova Gold did not. And the stock proceeded to sell down to 37 cents by the capitulation low that took place in the sector in October of 2008. So anybody who had cash down there was very happy. I fortunately did have a lot of cash, and I bought a bunch of stock. I did very well on the way up. But my original point is that the gold stocks bottomed in October of 2008, while the marketplace, the U.S. market, did not bottom until March of 2009. So from 2008 from October of 2008 to March of 2009, the gold sector was bifurcating from the U.S. stock market and going higher. And I vividly recall even where I was at the bottom of the market in 2009. I was in Ushuaia, which is the southernmost city in the world in Argentina, and the port, which is a very busy port. There was not one ship in the harbor. There were just containers lined up in the port. That one ship. It was the most incredible thing I'd ever seen. And I said to myself, "This isn't a bottom. I don't know what is." So I just started to buy even more. And you're just getting that. You're getting the feeling that something like that is about to take place in the mining sector again. At the same time that the Federal Reserve monetary policy will be forced to pivot. We just don't know when that time is. So having a lot of cash now, it may not make sense as far as inflation is concerned, but if you're a speculator, it's all important right now to have a lot of cash, because you want to be able to take advantage of these bargains that take place right before or right after the Fed pivots, because we know it's coming.
Excellent. Well, David, your website is juniorminerjunkiewithay.com. If you're new to David's commentary, go over there, sign up for his free email list. Every Friday evening, you'll get emailed his weekly commentary as it relates to the macroeconomic environment, the gold sector, and the junior miners. And if you want specific guidance, he has a paid-for service, which is very educational. Even if you don't buy any stocks that he features, the educational value of what David offers in terms of his weekly commentary, interpreting what's going on, giving you his advice, it's well worth the $1,000 or so annually that the service costs. So David, I support your service. I've learned a lot from you over these 6 years we've known each other. And thank you for contributing to my show again today.
Oh, thank you for having me on every month, Bill. I really appreciate it. And I just want to convey to all your listeners, trade safe, but don't trade scared. It's a great time to have a lot of cash. And if you're fortunate to have a lot of cash, just be patient. And this sector will eventually reward you if you end up taking advantage of some of these deals that are coming our way.